Hello ICT traders, good to see you back here again. In today's video, I'll be taking you to the very basics of smart money concept. And when I say basic, I mean these are the very first thing you need to know about the market, and then you will be able to trade with the smart money concept properly. So I'll be showing you how to easily identify a valid market structure shift, or what other people call change of character, how important it is. Because most people make mistake in identifying a valid market structure shift and then end up getting stopped out. So I will be showing you how to easily identify them. And I think this should be the last time you have trouble identifying a market structure shift that is valid. So let's get into the video. So the first thing you need to know, and the first thing I wanted to tell you, is there is this confusion about time frame and market structure. If you are not able to understand how time frame works, you will not be able to understand your market structure properly. So a lot of people want to, navigate through different time frames and still have a proper market structure delineation. So let me tell you something that will help you. When you are doing market structure for a particular time frame, let it be strictly for that particular time frame. All right. So if, for example, I said this is a break of structure to the downside, which is B or S. What I mean is that this is only a B or S in the 4-hour time frame. All right. In the 4-hour time frame. So I will not go down to the lower time frame or go higher to the higher time frame looking for this exact area. No. I will have to mark out or delineate my market structure across every time frame differently. And this is where the confusion of many people come in. All right. So let me show you how to easily identify a valid market structure shift. So in simple terms, what does it mean to have a market structure shift? A market structure shift simply means a turn in the direction of a market at a particular time. So if the market is bullish and it decides to come down, that is to go bearish, we simply call it a market structure shift. Let me show you this example here. Assuming I have this price range, let me identify it properly so you can see it. Perfect. Let's say this is my price range. And then price decides to go in this direction. Just something very simple and straightforward. And all of you know that this is what we call an uptrend. When you see price moving exponentially in one direction, coming up, after dealing with the liquidity above here, quickly coming down, doing something like this, and boom, it starts coming down to the next liquidity on the opposing side. So mostly price moves in one direction because it is seeking liquidity. And once price is done with that liquidity, what did we call liquidity in simple term? Money, in form of buy stops and sell stops, or what we call stop losses in simple term. So people that were here, all their stop losses are here, and people will leave these stop losses because they want to make money. So the price algorithm is designed in such a way that as it comes around here, the lifeline of this movement, or the reason why this movement is happening, is because of this money. And once it is done, or once price has finished dealing with the money here, it looks for where there is higher concentration of money. Something moves from a level of lower concentration to a level of higher concentration. So once price is done with what is here, it begins to go to the direction where there is higher concentration of liquidity. And where will that be? At the opposing side. All right. So it has no business being here. So this is why we have market structure shift. And once we have market structure shift, what next do we have? We would look for price to now go to the next direction. And that is when we will call this a market structure shift. When we see price breaks lower here. So in an uptrend, you have something called higher high and a higher low. This is a basic terminology, or these are very basic things in the ICT concept. So you have higher high. As price keeps printing higher highs and higher lows, we assume price wants to go up. Alright? So we interpret everything happening to price from the lenses of this particular information. So at a point, when we are printing an uptrend, our eyes is always in the higher low. You see the higher low is the one on the right here, where you have the support level. So if price crash below the higher low, with the body of the candle closing below it, we are said to have a shift in market structure. Now this will bring us to so many other information that I want to show you about the smart money concept. So look at this. Let me start from here. I just want to show you how these things work. Simply, straightforward, and something you will love to see. Alright? So look at this. Price has been going up for an uptrend. We have this, boom, let's start from here. Let's call it a break-off structure to the upside. As we see price create this, let's have it like this. Okay, perfectly. So we call this a break-off structure to the upside, which happens mostly when price is going in a particular direction. So boom, price went from here. Where did the movement start? It started from here. And where is the last point that price stopped? Now this brings us to the concept of the next higher high. The question is now, is this my higher high? Is this my higher high? Or this is my higher high? Which of these three do you go for? A lot of people make this mistake. So let me hear from you. Just look at the chart carefully. Let me zoom it so you can see and give me an answer in the next 3 seconds. Alright, let me show you what it means to have a high. So when price pushed from here to here, for a high to be formed, you need something called a retracement. So this is it. When you have boom, retracement, right? And then you call this place a high. Yes, you call it a high, this place. So that when price breaks above it, we say we have broken structure. So if that is the case, what does it mean now for me to have a retracement? A retracement is said to be formed when you have at least 3 candles closing below each other. At least, I said at least, I didn't say it must just be 3 candles. At least 3 candles closing below each other with the body, not with the wick. I will show you what I mean by that. Let me just show you this in detail. At least a little bit of information like this. So we have 1, 2, 3 candles. So if we have 3 candles like this, and this is a sell candle, the open is normally here and the close is here. A sell candle normally opens above and closes below. Alright, so you must have all the close below. So this C is lower than this C is lower than this. You see? So we have 3 candles closing below each other before we can call this place a high. So if you are doing this, that means you have 1, 2, you didn't have the third candle closing. That means what actually really happened here is just a stop in activity in the market for a short time before price starts going up. And then the next thing would be, what else? Let's see it. As price came up to this area, let's check. Did we have that particular retracement? We have 1, 2. So this is not a retracement or not a high. This is not a high. This becomes your high. I hope this is understandable. I just hope this is understandable. So if you're doing your fib level from here to here, this is going to be your low. This is the highest level, the highest and the lowest. So this is the equilibrium point in your Fibonacci tool. You can easily do that with your Fibonacci tool. Let me show you how to get this kind of settings. It's pretty much easy. If you get the fib levels right here, I think it's here on this side of trading view, you see fib retracement. I just made it my favorite so that I can easily access it here. So you make it your favorite. But if you come to settings, you'll actually see that it has almost so many values ticked in. So I normally tick the 0, 1, and 0.5 so that I can have just 3 points. And then the colors here, I can easily change it. You can see, if you just go beside it, you can easily change the colors. It's straightforward, honestly. Very straightforward. So this becomes discount, this becomes premium. So as this time frame, regarding this time frame, as far as I'm concerned, I need price to come to my discount before I go bullish, which means price never came and I did not have any chance to take the trade. So once I am done with that, now this is now my new level. If I break above here with the body of the candle, it means I have a new break of structure and this becomes my new low. Not here again. We are done with this place. Nothing will take us back here again. All right. We are not coming back here. So as far as we keep printing this in the upward direction, we have an uptrend. So when price came here, boom, it closed above this guy. It closed above which guy? This one. Let me show you. It closed above the highest level. In identifying the structure, you just have to look for the highest wick and put your line there, draw it to the end. And this is it, guys. Look at this. Boom. The body of the candle closed above this line, which means we have had a valid break of structure. A valid break of structure. Nothing will change your mind about this. This becomes a valid break of structure. Let me make the color white so you can see. Valid break of structure. Alright, so as price went up, this is now a retracement, guys. Notice what price did. Let me show you. It has 1, 2, 3 candles. Look at the close of those candles. Now this is where the information is powerful. You see, this is a bearish candle. This is a bearish. All of them were closing below each other. The close was here. The close was here. The close was here. All of them. You see, this line is lower than this. This line is lower than this. So we have a retracement. So if we see this, this becomes our lowest area now, the new low, and we broke above here. That is why price never came below here, because price recognizes this one. We have just filled up this imbalance and boom, we went up. I hope you understand this. So the next one, you see, price created a new high here and this is a new low. All right. So this becomes your area of importance. As price pushed up, boom. Did you have 3 candles closing below each other here? No. Here, this is not a retracement. This is not a retracement. That is why you can easily see price doing this. Pushing below it massively like that and still going to the previous low. This low is still important because we did not see a retracement. So as we see price come right there, look at this. Notice how price went below it just to sweep liquidity, not to close with the body of the candle, and boom, it came back up. So now this is where another information is important and seriously important. So now that we pushed above this, a new break of structure. Oh, let's have it here. Make it white. A new break of structure and boom, we went up from here to this area. So this is our low and this is our high. I hope you're seeing this. So if you see this, what next is the point now? Here is now your new low. All right. You have a lower low, but you did not have a higher high. So this becomes a lower high and this is a lower low. At this point, you are actually in an indecision area. You don't have an uptrend, you don't have a downtrend, but it is majorly uptrend. So at this point, you will begin to see price giving you some signals. So price created this high and this low. So this is our range. It is now left for price to either push lower or go upward. So you see price actually decided to go upward. That means the movement is still valid, the uptrend. So what do we watch out for? A breakout structure. Boom, to the upside. You see? And what do you see? retracement. Boom, 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 boom. Many candles. We just need 3 candles to show us that the retracement is valid. 1, 2, 3. And then we have so many. It can take so many candles, but all you need is at least 3. Alright. So where is your new low? This is your new low. That is why you will not see price coming lower than it when you have a retracement that is valid. So price went above here. Boom. Price doesn't easily violate this low. So if price violates this one, that is when we say this is a market structure shift. Because we know there was no reason for price to come lower than that except if it is ready to change direction. Did you now understand? If you have a valid retracement and then you have a low and price closes below it, it means it is something serious happening. I hope this is understandable anyway. And then this is only for the 4-hour time frame. So price keeps moving, keeps moving, keeps moving. Notice how price did it. There is no any way you can show me that price actually created a shift in market structure, because all these ones were just level breaking out above it. And then price came right up here, creating this high. It broke structure here to the upside, creating a low here. Now, what really actually happened here? Look at this. What actually happened here? Price went up, creating a higher low. Boom, higher high. And now the higher low is violated. Boom, at this point. The higher low is violated. Does that show you that there is something happening? And this higher low was not just broken haphazardly or just randomly. It came in with such energy. The energy was massive. Look at these candlesticks. Can you say that the sellers really meant it? So this becomes the highest level, or where price was actually targeting the liquidity. Now we will change it to what? A liquidity area. No longer a break of structure. That becomes a liquidity area. So price was actually going to clear all the liquidity there. So a shifting structure came in. So did you now see it? For a shifting structure to happen, you need a low. And a low will have to carry a valid retracement. Boom, 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 boom. So many candles. And this is the low. Price came closing with the body of the candle below here. So from here we can say that price is ready to change direction to the opposite side. And this is it, the miracle. From there, it is no longer uptrend for us, it is downtrend. So this is the only ground you can say that you want to go bearish on your trade. Is that making sense? That you want to go bearish on your trade. Look at it. Break of structure, price keep breaking. And the same thing happens. For a valid retracement in a downtrend, you need at least 3 candles closing above each other. That is a bullish candle. This is, it opens below and closes above. Opens below and closes above. Opens below and closes above. This is going to be applicable across every time frame, including 1 minute time frame. So if you're looking for a retracement or a shift in market structure in the 1 minute time frame, you're not going to tell me that this is the shifting structure. Let me show you what many people do. Let me show you. Okay. I want to show you what many people normally do. I did not see it right here anyway. Look at this. Boom. It just created this. You have 1, 2, 3 candles. So we have this lower high, lower low. So this low and this high now. Because you have 1, 2, 3 candles, more than 3. If you have more than 3, it's fine. But this 3 qualifies to be a retracement. So if we close above it, this is a valid shifting structure. What I'm saying is that this is the high, this is the low. Because this is where the 3 candles stopped. You can have more than 3. I said it once and again. So if you close above it, this area becomes difficult to be broken. So this is the reason why you see price will now go in your direction. If you're taking trades, it will be hard for price to come back. Do you understand what I'm saying? Do you even understand what I'm saying? If you don't get this correctly, you will make a lot of mistakes, guys. So from a downtrend, now we are back to an uptrend. As far as we keep printing it like that, we would have this kind of a price action. Let me check any asset that I will show you again before I close from this particular session. So, okay, so you can see this is the same thing. Price action always follows this same pattern. Okay, let's say, for example, price pushed to this area, boom, from here to here. All right, and then it came down right here, pushed and created this one. You see, this is 1, 2 candles. So once you saw this one, many people will do that. Once they open their eyes and they see this one, price closing below here, below this area, they say, yes, we have a shifting market structure. And they start selling. They say, okay, let's sell from here. Bearish order block. And definitely their stop losses is here. They get stopped out. All right. They get stopped out. Another, okay, I did not say this, but then another way you can look at a valid retracement is this. Sometimes a valid retracement to me can be a very big candle, single big candle, or 2 big candles that if you look at them visibly, you know there is massive energy in that candlestick. For instance, look at this. This is a retracement, of course. Just because it is 2 candles, it doesn't mean that I will not call it a retracement. Why? Because I'm literally seeing it closing up more than 5 candles or more than 3 candles, just like this one too. So this one is also a retracement to me. Guys, if this explanation is not enough for you, you can pay me for one-on-one. I will teach you these things once and again. But I've done my best explaining it. All right, I've done my best. You see, shifting structure, price coming, breaking down. As price keeps doing that, all you need is to follow the direction and the rhythm. And the rhythm of that, price went up, creating this one, low. Just push a little bit, crashing. Moving up. So you can go and practice on your chart once and again to gain mastery. All right, to gain mastery. So I'll be stopping from here, guys. So I'll continue to make effort to explain these things to you in simple time. Thank you very much for watching, guys. Make sure you give this video a like and subscribe also. Bye-bye.